Hey folks, welcome to Market Correction Analysis by InTheMoneyStocks.com for July 31st, 2007. What we're going to focus in today is what happened in the markets and talk a little bit about the big reversal that we saw today in the markets and discuss why that happened, why we thought that might happen yesterday, and also discuss the previous calls that InTheMoneyStocks.com has made, which have been to the point within days of happening, whether it's the market itself in the correction, which was called on our website, in the daily market report, which is free, by the way. Go visit our InTheMoneyStocks.com website and click on Daily Market Report, and you can read every day for free what we're calling for not only the markets, but also gold, the 10-year bond yield, the U.S. dollar, and oil as well. All right? So you guys can get that free information every day. You guys should all be reading that because we do all our analysis from a technical perspective. All right? And now you might say, well, why just technicals? And I'll tell you guys this, and this is key here. Technicals weed out all the Wall Street hype. And that's all you really need to know, is that when you focus in on technicals and charts don't lie. And as we say on our website, which is our little catchphrase, we say charts tell the truth. All right? And that's true to a T. You can tell when a stock is going to fall, go up huge, when a market's going to fall or go up huge, by looking at the technicals and the chart patterns. They tell you everything ahead. Yet if those of you guys that probably watch the media on TV, they'll be hyping stocks or the market left and right or talking about it in a negative fashion, and they're usually late to the party. But it gets you so excited by watching these people that you're likely to do something wrong. And that's where the technicals come in. So we strongly encourage you all to sign up for our webinars and our seminars on our website to learn these technicals, because you can kind of weed out all that Wall Street hype that the media puts in by watching this. And this is a very fine art, folks. Not a lot of people can read the technicals, all right? You will only find maybe 5% of all those pro traders that are really good at reading technicals. And we are there at InTheMoneyStocks.com to help you learn them and help you stop making those kind of stupid errors that are caused by the hype, all right? Fundamentals are always lagging, folks. The charts tell the truth, all right? What I would say here is that you could see FSLR had earnings today, and it sold off after earnings, and we knew that ahead of time going in based on chart patterns and technicals, and whether it's stochastics and negative divergences or moving averages, there was a bunch of things that went into calling that as it was going to fall. All right, folks, and I'll bring that up right here so we can all see the chart. All right, right now it's trading down about $10 from $112.50 down to $103, and the chart patterns on the daily really told us, all right? Look at this. We had a nice double top. You can't get a better signal than that as a double top, all right? And you also saw negative divergences here and a rolling stochastic. Look at the negative stochastic here, and then you only had this angle in a chart, almost a flat to slightly down, all right? There are a bunch of things that go into here, also using the MACD, money flow we were also watching. And one thing that I did catch, which is somewhat fundamental, but it's kind of key, is that the insider, the CEO, the insiders were dumping hundreds of thousands of shares. All right, you have to be smart about these things. Read the technicals, understand where it's going, and then base your decision off that. Not the fact that people on TV and the media are saying buy solar, buy solar, buy solar, because it's always late. They're always late to the party, which causes the average amateur investor to be late to the party. And I want to stress this 100 times over, guys. Please do not be the amateur investor, the average investor. I need you all that are watching this video to take a step above, and then you will stop making the errors, all right? Always understand that when things are getting pushed in the media, by the time it gets to you, by the time it gets to me, all the big guys are already in, and they're unloading it to us buying when they're pumping, all right? And please understand that, all right? It's a 100-year-old scam. It's probably way older, going back to ancient civilization, because when the big guys, the money makers, are all pushing things, chances are they're pushing it because they need to get out, and they see the writing on the wall. So please don't get caught up in that. All right, folks, let's talk a little bit about the market today. All right, we saw a big push up in the morning, the gap up, which we basically said yesterday we needed the Nasdaq, and I called this in the video yesterday. We need the Nasdaq to get close to that 50 moving average here on the bounce, and that's exactly what we did today, folks. You can see this push up at the open. We gapped up. The Dow was up over 100 points. I think as much as 140 or so, maybe 120, 130. And then we saw a major reversal intraday. All right, and this is a big, and yesterday, if you guys were noticing, and then in the day before video, we said When we closed below a technical line that we drew on the chart in the prior two ago video, we said this is a major breakdown, guys. This market is not going to be okay. We are going down further. We are going down big. And I've gone out on a limb and said from 3 days ago when the market first started to correct, I said the total correction will be in the realm of 15 to 20%. All right? Possibly more, but I think 15 to 20 will be correct. All right? Now, again, could I be wrong? Yes. But chances are, based on the technicals that we're using here, we will be somewhat in the correct realm of that area. All right? Minimum 10%, upwards of 20, and it's just ugly out there, folks. All right? We had a major squeeze up over the last year, 20% gain in the markets. Now you're going to give some of that back because this subprime is really going to hurt, all right? And we're seeing that today. Let's look at AHM. AHM was one of the trigger effects this afternoon that caused the sell-off, all right? Here it is. This stock was halted all day until, let's see, until 1400 hours, which is 2 o'clock, when the markets really started to sell off. And what happened? Well, these guys came out and said yesterday, well, we can't really pay our creditors. We need more cash. We need more financing. If not, we're going under. And they're a mortgage lender and dealing in subprime, and things are horrible there, folks. You are having these crazy mortgages that readjust after 2, 3, 4 years, now adjusting. They were lending people money that had credit that they didn't even pay their cell phone bill. What are you doing lending hundreds of thousands of dollars to an individual, or you're talking about trillions of dollars or billions in the very least to people that were not, I mean, it's just credit-wise it was not smart. And now they're paying the price. So you know what? For those investors that got those loans, good for them. You know, now the companies that were ignorant and stupid in making these loans are going to pay the price. And not only was it this company that caused this spike down, by the way, look at this stock, all right? You had to open up this is where it closed before they halted it at $10, almost $11, and it opened up pushing all the way down to $1. It closed at $1.04, guys. That's an 88 to 89% drop in one day on a stock. That is humongous. All right? And in addition, what you also had today was Greenspan, or not Greenspan, Bernanke and the Fed basically saying they're not going to bail out mortgages, which is smart. If the Fed continually bails people out, then you always feel like you have a safety net. It doesn't matter what you do. I'll give, I'll give the mobsters. Who knows who I'll give? I'll give anyone I want $1 million because I know someone's going to come bail me out, and I won't have to take that loss. If we're not accountable for our actions, then we don't feel like we have to be careful at all. And that's what the Fed said, and that's what also sold the markets off. So we saw the NASDAQ dropping 37 points today, closing at the low of the day here. All right. And the Dow dropping over 100 for a major sell-off, major reversal because the Dow was up over 100. So we had a swing of almost 300 points today in the Dow just from the highs to the lows, and over 50 points, almost actually 60 points on the NASDAQ. That's a huge reversal, folks. And on the daily chart on the NASDAQ, look where we closed. As we said yesterday in the video, we pushed up, but we knew we were broken, and we knew we had to come down, and this isn't over by any stretch. We're going to February lows and lower. All right, folks, we'll bounce hard to February lows, though. Don't think we won't. But we closed down here below yesterday's low as well. Yesterday's low was 25.52. Today we closed at 25.45. So that's lower. That's another negative signal in this market. And even after hours, let's look at the ES Minis. The ES Minis are selling off again. All right? This is the ES Mini chart. Again, we gapped up here. We pushed up to the highs again. Then we sold off. Came down. We bounced off resistance a little bit, but we really just cut right through that moving average. That was support right here. Then we bounced up, touched the resistance point again, which is the 200 moving average, and sold right down, guys. We bounced, and right into the close we bounced. This is right here the close of the markets. So volume lightens up huge, as you can see down here. Very light volume, meaning that they can push the market up, or you'll have buyers coming in, and they'll have a big effect on small volume. And then the market, the ES, which is the S&P Mini Future Contract of September, closes at 415. Here we see we reopen at 430, and you can see we started to sell again. So the ES at this point is down another 5 points, 4.75, 5 points in the after-hours trading. And this trades 24 hours a day except for that 15-minute span between 4:15 and 4:30. So you get a very accurate picture of where the futures are going to go based on this contract, okay? All right, folks, I'm just going to wrap things up and talk a little bit about what everyone needs to understand. I need everyone to realize that InTheMoneyStocks.com is here to help you guys. All right, the $100 for the swing trade alerts. These are right on the money, guys. Phenomenal. The day trading chat room is $200 a month, but you're literally with a live trader almost on a one-on-one setting all the time during the intraday stock trading chat. And when we're not day trading, we're discussing the markets and teaching level 2 and answering questions and going over technical analysis. In addition, everyone should be paying attention. We do webinars and seminars. If you guys want to learn the ways of the markets, you need to get on board here, folks, all right? These are phenomenal assets to have, very inexpensive comparatively to our competitors, and we advise you all to come on board. All right? The webinars you can do from the luxury of your own home on the computer, seeing everything that we see as we teach, and you can get on board here.